Hello, fellow traders. Let's get this show on the road. What are we going to talk about today? There's been a bit of burning contention with regards to candle colors and breakthrough of the support and resistance. So I'm going to go over that a little bit again today. We're going to talk about any trades that you might have for us today. Don't forget, most traders lose money. If you're unsure, you probably shouldn't even be trading. Let me take the risk disclaimer out the way. And let's get this show on the road. You'll see I've moved my picture to the left a little bit smaller so that it's out of the way. Somebody did mention that it was in the way of the chart, so I've tried to get it out of the way of the chart as much as possible. So if it's still there, let me know. Morning, Grizzo. Good to see you on board. Good to see you first here today and ready for action. Let's get going. Yeah, so system strategy, keep it consistent is the big thing we're talking about today, as well as the fact that we really do have to talk about how the candles break through and how they come out of these areas, because there is a bit of and it seems like there's a few people that don't understand it 100%, probably people that are new to the channel and that sort of thing. So we'll just go over it a little bit today, not too much detail, because I know a lot of you know how to do it. Then there is, of course, BlackRock debuted their Bitcoin exchange, and we've got the Goldman Sachs one. So these exchange traded funds on crypto mean that has crypto become too big to fail? Let's discuss crypto a little bit today and what we think of it and what's going down and what's happening with it. That is a bit of a concern to me. It always has been a bit of a concern to me, and I've always wondered if Bitcoin is just a whole lot of fresh air. Even Jordan Belfort says that it's a whole lot of fresh air, so let's agree to disagree on that one. How the trade's going? Well, the history, yeah, as you know, the Australian dollar, US dollar got taken out last week. New Zealand dollar, US dollar did well, but it got taken out in a stop loss, and so did Brent this morning. Trailing stops, but there's a reason I moved the trailing stop up close to them. For example, Brent, I moved the trailing stop up close because it's gone into the supply area. It came back, took the trailing stop out. That's fine. No big deal. I'm not too concerned about it. And I did the same on the New Zealand dollar, US dollar. I moved the trailing stop in because it's hitting an area. You'll find this when you're trading. You'll find this often that you come across these levels and you think, these levels are in the way. And then I'll just bring the trailing stop up and see what happens. And if it takes it out, so be it. It's meant to be. But that's okay. I'm not too concerned about that. It's not the full profit, but at the end of the day, it's nicer to get the full profits. Look, trades like the euro US dollar will in all likelihood meet the full profit because there's not much in the way except this thing in the middle here, which we'll see what happens with that. And then the euro Great British pound has also got a long way down before it hits any kind of resistance to stop it from going any further. So we'll leave that one to fall down. And as you guys saw, we took a long trade on the US 500 now. I got in a little bit early, and this might confuse a few people, but it's basically my feeling on the market. You see, when I looked at it, I thought it broke through this support. It mulled along here. It hasn't really broken to the downside. It's retested this area 1, 2, 3 times, maybe even 4 times. And then it's decided to cruise on into it. When it cruised on into it, I just, look, it's broken its structure here. I kind of looked at it and thought, you know what? Let's just take a shot at this. Let's give it a long shot, and we'll put the stop loss down here, and we'll put our take profit way up high, because if this thing runs, it's going to run quickly. It is the S&P 500, and I did want to be long in it, so I've taken the long now, and we'll see how it goes. We'll see if it works out. How's the train? And then, wow, Barris said crypto trading. We'll talk about crypto a little bit later as well. We'll get into that, and we'll see what it's all about. Shane, we're not doing 5-minute charts today. Too many indicators because it's confusing a few people, but we will stick to the, what we normally do and what have you. But to get to the point, there was a question on specifically on taking candles out of these resistance levels, right? Somebody was confused. They asked me, what if this candle's green? If it's coming out of a resistance or coming through and turning downwards, do I still go short? Well, if it's green, it's going up. So in general, if it's going up, it's going to be bullish. And there's a good chance it's going to do that. It's going to break through to the upside. So we don't want to be going short if the candle's a long green candle. And also, you've got to look at the size of the candles as well. I mean, you get these huge green candle. I wouldn't short against it. It's a strong green candle. What you got to look for, if it's coming out of, if it's breaking through or coming back off a resistance, you're looking for a big red candle or a decent sized red candle. That's going to give you the short trade. And vice versa, if it's coming out of your support, you want a decent size green candle out of the support. On this one, I've gone in a bit early, but what you would want here, if you were getting in now, you'd want a green candle coming out of here because it's actually breaking through. But now what you've got to be careful of, the confusion comes in with, I keep it simple. I don't wait for the retest. So for example, if I get a red candle that's come out of the area and it's closed, I'll take the trade because the trade's there. I don't wait for the retest because you don't always get the retest. Some people like to wait for the retest before they take a trade, and that's fair. That's just being extremely cautious. So what I would say is there's two ways to look at this. If you get the green candle that comes out here and closes, you can just take the trade. What some people will do is they'll wait for it to go out, come back and retest, and then go up. Doesn't happen every time though. But if that happens, that just gives you insane confirmation that it's going to work. For example, here it's gone up, gone down, gone back, retested, gone down, and then gone back up and gone through. I like to keep it simple. I don't like to get too technical and too complicated. So breakthroughs are great. Breakthrough, normally what you would do is it would break through, and what you would do is you would then wait for the retest before you take the trade. Now you can see here you didn't get the retest. Basically, you got the red candle, closed, came out, and went down. No real retest. And if you want to wait, call that a retest, that's far too late. And it's way down the road, and it's already going to the upside. So what I would do is just take the red candle, take it short, and there she goes. Same thing to the upside, similar scenario. So what I prefer to look for on a trade is a breakthrough on a trend resistance, breakthrough on a trend support, or a breakthrough on the normal support and resistance levels, which we take from the day charts. Now, looking at this, why would that be a green candle? Very, very seldom you're going to get a decent long green candle that's going to give you a short, or a decent long red candle at the top that's going to give you a long trade. So keep the colors right. If it's a red candle on top here, it means it's coming back into the area, and then you want to wait for the green candle to go out. For example, here, if this candle was somehow, there's a green candle. So you're not taking a short on that. That's a green candle. You're waiting for the next candle. You're waiting for the next candle. You're waiting for that red candle to come down and give you confirmation that it's short, and then you're taking it short. And look at all the short that you got. Same with this. What I did is I took this a little bit early on the green candle, waiting for the green to go up, expecting it to continue on up. I should actually have waited for it to break through completely, but I didn't. But I have got this area here where it's broken to the upside above the resistance. The big problem here, we've got a lot of fundamental news going around with tariffs and Donald Trump talking, and it's affecting the S&P 500 a lot. So I've given myself a really wide berth on this as far as the stop loss goes and as far as the take profit goes as well. Given ourselves an incredibly insane amount of space. Let me just see if I can see on here where I can. Now there's a good example of the question I got where I was asked, if it's a green candle, do we still go short? You see, I might have gone short on that red candle, but if I didn't, I wouldn't go short on that green candle. I'd wait until that green candle closes. But when that green candle closed, one thing I did note is all the sellers came back into the market, and the buyers, there's a solid candle below that tail. That's actually telling me that there's a lot of sellers coming back into the market. And then if I look over the next one is a red candle, so I would go short on that red candle, based on the fact that the candle before it kind of showed me tails. But I don't want to confuse you guys with candles. If you want to know more about how to sort of read a candle, go to Google, go and download a thing on candles and let it tell you something. But what I look for is big candles. What I look for is long tails. What I look for is undecided candles. which way they're pointing, which way they're facing, what color they are, and that gives me good indication as to which way I'm going. So no, I won't go short on a green candle like that, because for me, that's a green candle, which means it could go up. But the next candle's red, that's fine for me. I'll take the red on that. I'll definitely not go short on those tiny little green candles. They're a waste of time. Little crossover there, undecided. So just to give you an idea of how I think, you see a big green candle forcing its way through an area like that. That for me is a good long trade, and you can take that trade. But your next candle gives you red, but you're already in the trade. You just live with it, or you wait. If you're not in the trade for the next green candle, take that one, and then off you go. Long morning, everyone. So Shane, good show, Shane. Good show. Yeah, no, I don't want to confuse everyone with the 5-minute charts. Look, Shane, I used to trade 5 minutes a long time ago, and the one thing I did learn about the 5-minute charts is you don't end up with a good ending. I was very fortunate to break even playing that game. You know, you go through stages where you're very profitable, and then you just hit one or two of those bad trades. And I can tell you that scalping is not the answer. It definitely is not the answer. When you've done it for a while, and it's so demoralizing when you've done all that work and it just all gets wiped out, and you just think, wow, why did I even bother? So from my perspective, the longer term trading, it's less work, it's easier, you can take your time with it, and you can position yourself in the market. Shane, it might not be your downfall at the moment, but from my experience, it will be in the future. So, for example, I did it, and I'm not saying you'll be as bad as me, but I was really good at it for a while, and I thought that the sun shone out of my, just to say a few things, I thought I was brilliant, and I thought I was just the best. And these are aha moments that come to you where you realize that as much experience as I have doesn't mean I'm a better trader than you. You get kicked. I mean, you really learn from these things. And I thought I was the bee's knees trying the 5-minute trading and getting in there and doing that sort of thing. And then you find out that you're not. You find out that at the end of the day, you're just like everyone else, and you end up thankful that you could break even and walk away with the money that you put in. So all I say is be careful of it. I mean, some people are good at it. Some people are made for it. Some people, their genetics are made up for it. Others, on the other hand, not so much. Now, when it comes to crypto, Barris asked, what do you think of crypto trading? Trading you can do. There's nothing wrong with trading crypto. I'll trade crypto. No worries, because it's a trade. It's in and out. You can trade it as much as you want. You can trade any of the cryptos you want to, in and out, few hours a day, whatever the case. You can take your chances on it. But investing in it, never. I wouldn't invest in it with your money. At the end of the day, for me, crypto doesn't hold any asset value. It doesn't have any substantial holding behind it. It doesn't belong to anything. For example, if I buy into a company like Coca-Cola, I know that it's got an asset value. I know it's got staff. I know it's got a CEO. I know it's got a factory making Coca-Cola. I know it's sold in shops all over the world. I know it holds some kind of intrinsic value. And I know I can see its growth. I can see its financial statements on an annual basis. It pays me dividends. It's a real company. It's like being part of a real business, and I feel comfortable being invested in something to that effect. With crypto, on the other hand, there's no real basis to it. Many people have tried to explain it away, but it's all rubbish at the end of the day. Who owns the internet? No one can own the internet. And they say you're buying a piece of, this, that, and the other on the internet. That's absolute rubbish. Crypto has got no basis whatsoever. Even Jamie Dimon said it from Goldman Sachs. He said it's a highly dangerous product. And basically what it is a bunch of buyers and sellers trading against each other with no basis whatsoever, determining the price of a product that really doesn't exist. So as far as investing goes, my big fear is, for example, now, like I said, BlackRock debuted the Bitcoin exchange today. And that to me, or yesterday, that to me looks like something of the 2008 crash that concerns me, where they've allowed this to get out of hand, where they're trying to regulate something that's basically fresh air, which, that this is what happened in 2008 with the housing bonds and that sort of stuff. There was no control over it. And if the bottom does fall out of this, if the bubble does burst and there is no asset value and there is something untoward, some big Ponzi scheme, my big worry is the size of the companies that have got involved in it, because it's not because they believe in it, it's because they have no choice. They have to stay ahead of the game. If you're going to stay ahead of the game, you've got to get involved in it. I mean, if Goldman Sachs is getting involved in it, BlackRock's got to get involved in it, and so on and so on, and everybody gets involved in it, and eventually you end up with a nightmare. So does it become another too big to fail scenario? What is the scenario with it? Or is it a situation where something like Bitcoin is being taken over by the banks, and then it will become something sustainable and something real? I don't know, but we'll have to see how that goes, because, the governments of the world are looking for something new. They are looking for a new digital currency. I'm pretty sure they're not planning to take on a Bitcoin or a crypto. They're planning to create their own. They're planning to have their own digital currency where they'll say, you can have so much, and, this is how it'll work and what have you, and they'll have total control of your finances. But at the end of the day, it's all about control. And, people have gone into crypto believing that they'll get away from the control. And I think all they've done is they've created a way for the world to control them even more. So somewhere down the line, it's all going to end. How can a currency even be labeled a currency if I can't walk into my shop and spend it? If I can't walk into my local store and buy something with that currency, then that currency is effectively worthless to me. It's just like having a piece of gold but at least a piece of gold I can sell again. And Bitcoin, I suppose you can as well, because it's on the internet, but it's something I can hold at least and put on my mantelpiece and say I've got some value there. Yeah, no, I'm not a big fan of crypto as a whole, but for trading, I'll trade anything. If you create a market, I'll trade it because it's tradable. And but trading, you mustn't confuse trading with investing. Trading is short term. Trading is, a week, a day, an hour, 4 hours, whatever the case. Worst case scenario, maybe a couple of weeks. And, what's going to happen in that time, and how much are you going to have invested in it? You're going to manage your risk, that sort of thing. So as long as you've managed your risk, as long as you've controlled it, you can trade anything. It doesn't matter if it closes down or not. What matters is when you're investing and you've got a lot of money in it and you're waiting for it to gain some value over time. That's where the problem comes in. Now, you'll say, oh, these people became crypto millionaires. Loads of these people became crypto millionaires. Didn't they just, eh? But don't forget, and never forget this, what I've seen over my years with all these schemes is the people who get in first are the people that make all the money. And the people who get in last are the people that cry. Without a doubt, every single time. So do be cautious, do be careful when it comes to that scenario. You see, Jane, like you said here, last year the M5 was great, but since Trump has been in, I've been whipped out. It's going to happen all through life. It's not just Trump. It's just there'll be something that always happens that changes the game. And you'll be trading the M5 and thinking, this is all going well. The M5 works really well when things are going in a particular direction. It's when things start to whip around like this that the M5 becomes a nightmare. And it normally wipes you out. Okay. And the big thing, Shane, is the higher time frames are more consistent because they're they're just moving slower. That's all, and you can get a better reading for it. Also, the sample size of information in each candle or in the chart is that much stronger on the higher time frames. Like I always use the analogy, if you were testing a system to start your billion-dollar company and you put 5 people in a room to test it, and they came out and 3 of them said, nah, it's great, dude, go for it. Would you start your billion-dollar company on that? But if you put 1,000 people in the room and 800 people came out and said, nah, it's good, mate, let's go for it, you might take that information. So it's similar with trading. If you've got a 5-minute chart, the information that's in that candle is only for 5 minutes, which means it's a tiny little bit of information, which means the information is insanely unreliable. It's only reliable for 5 minutes. Just saying. So yeah, so that's the information on the candles, and that's a little bit of information on the crypto. I don't have a crystal ball. I don't have any predictive capabilities. I just have what I know from my trading past. And like I always tell you guys, the market is 50-50 because the market is made up of human beings. It's made up of traders. The reason we look at charts is because these are all traders trading in the market, and human beings are creatures of habit. They do the same things over and over and over again. That's why, do you know that there's a statistic in the markets where they say there'll kind of be a big correction or a crash every 10 years. It's almost like human beings are creatures of habit. We build ourselves up to that point, and then we create that scenario. I don't know if we do it subconsciously or if we do it consciously, but we do it. And that is just a fact of life. We do the same things over and over again, whether consciously or subconsciously. I hope the stream is working out okay and it's not a bit jagged today. I see it is looking a little bit slow and whatnot. We are suffering with power failures in South Africa, and you know they lost 6 units now this week, and they're talking about load shedding again. I don't know if you guys know what load shedding is, but it means they switch us off for a couple of hours at a time while other areas stay on, and yeah, that's what it's got to. But it was worse. I mean, there was a time when they were switching us off for 6 hours, other times 4 hours, and now it's down to 2 hours at the moment if we start. But they're trying to keep the lights on at the moment because it really affects business. It affects a lot of things. It costs a lot of money to be switching the country off like that, but it's difficult. So most of us have figured out ways of being self-sufficient and being able to keep our lights on so that we can continue to work. But yeah, there's a few plans and a few things going on that actually make that possible. Like I said, my goal is not to make you rich. My goal is to make you competent, and hopefully you guys will be very, very competent over time. So yeah, if you want to carry on trading with the 5 minutes, you can. Not saying you won't make it. Give it a go. See how it goes. But you know, it will knock you somewhere down the line usually, and it will come back to bite you. There are very few guys out there that can get over it. It's also the risk amount. How much risk amount can you put into a 5-minute chart? For example, if I take a trade like this US 500, the US 500, we take this trade, we put our stop loss all the way down here in a very relaxed manner, put our take profit up there and leave the trade. Let's see what happens. Let's see how it goes. We know it'll probably work out. You know, there's all the information here to say that it will probably work out. The US 500 will probably go to the upside again, and we all know that. On the 5-minute, on the other hand, let's put it out there. On the 5-minute, on the other hand, what are we looking for? We're looking for it to get to this level here and then bounce down to here and then go back up again, or get up to here and bounce down. But look at the distance. I mean, you'd have to put your stop loss at 57, maybe 57.50. 57.50 is literally our cost, guys, and it's literally 5 pips away from where it is at the moment. And that's how big are you going to trade? What size trades are you going to put in to trade on a 5-minute chart? So if you're going to tell me you're going to put smaller amounts in, So you're not going to risk the $250 that we risk on the 4 hours. You say, all right, you know what, to be on the safe side, I'll risk $25. So what you're telling me is you're going to have to take 10 trades to make what I'm going to do on one trade. So you're going to take 10 trades now. So now you're going to sit here taking 10 trades to try and get to that result. That's a lot of work. That's a lot of work. And let's say you do well for 9 of the trades and the 10th trade takes you out. How demoralizing is that? You've worked so hard to do what I've done in one trade, and in 9 trades, in 10 trades, you end up breaking even or losing or whatever the case. It's a lot more annoying than, for example, what we did with Brent earlier, where we put a trailing stop on, it got taken out, but it made $100 profit. So what? You know, it's not demoralizing. It's like, I put the trade in, I left it. I didn't really manage it. I left it. It was managed. Yeah. I mean, we put the stop loss in, we put the take profit in and let it run. And all I did to manage it was like, it's looking like it's going to hit that level. So I moved the trailing stop up close to it. Not a lot of work, is it? And then it takes the trailing stop out. Oh, okay, no big deal. But if I'd been sitting on a 5-minute chart going, take this trade, take that trade, take that trade, watching it for an hour, 2 hours, and then that happens, I'd be insanely peeved, let me tell you. So, you know, you can look at it from 2 ways. Either that, or you're going to risk the full amount on those trades, and you're going to hope that you're going to be somehow successful by risking 5 or 10 points on a trade with the full amount that you want to risk, with very little information here. So that can be quite detrimental to your account. Yes, you can make money quickly, but like I say, you can lose money just as quickly as well. There's 2 ways to look at it. You know, either you're going to risk the full amount and you're going to take that chance on the 5-minute charts, or you're going to divide it by 10 and risk smaller amounts maybe. But then you're going to take so many more trades to catch up. So yeah, it's much of a muchness. You have to decide what you're going to do if you're going to do those smaller time frames. Are you able to take the risk? Are you able to handle the big risk that you're taking on those smaller time frames with that kind of money? I don't know. You know, it's entirely up to you. Will the US 500 go down to fill the gap? What you have to understand about this gap, gaps will always be filled. Always. And I know some people say that we talk rubbish when we say gaps will always be filled, but that's because they think in the short term, they're thinking it's going to happen immediately. But this gap might not get filled today. It might not get filled this week. It might not even get filled next week, but it will get filled at some time or another. So until that gap is filled, you know that the price could always come back to this level at some stage in the future. What I can't tell you is when. What I can't tell you is how. So that's how gaps work. They will get filled, but they won't necessarily get filled today. They'll get filled at some stage in the future. I don't think there's any other gaps lying in the past, hopefully. But if there's a gap, the only rule is it will get filled. The only other rule is it doesn't necessarily get filled immediately. It can take a long time to fill that gap. So if you're thinking, it's going to come back here today and fill that gap, it happens sometimes, but in general, it might not. It might go all the way up to here, and then only next week or the week after come down and then fill that gap. So gaps are not a tradable thing as such in this sense. Fair value gaps are a different thing that they've created. I don't bother with them. It is a thing where you got this tail here and the tail there, and you put that in there, and that's a gap, and it takes that. It did take that fair value gap and push it down. So there's money in that area, okay? But these gaps, these are gaps in the market, and those gaps, they got nothing to do with actual trading. You just know that they're going to get filled one day. That's all you know about them. So yes, it will come back and it will fill that gap, but not necessarily now. Right. Now you know a little bit about, and there's a difference between this gap and this so-called fair value gap. Now remember, a fair value gap is something that's been created by, I think it's the ICT guys that created that that concept of trading with fair value gaps, I must admit, it's not too bad. It's not the worst system in the world. It does work. You do pick up some trades from it. Doesn't work every time, but it does work. It does often give you some trades. So, if you want to use that, you can. I think I have done a video on FVG, just out of interest. It's a very recent thing, but I like to keep it simple. Stay with a support and resistance, stay with a trend support, trend resistance. And I like to add in a bit of supply and demand because, like I say, I'll draw my support and resistance in on the day charts, as you know, and then I'll come back to the 4-hour trade. And if I see some supply and demand on the 4-hour, I'll put it in. It's sort of in between and whatnot. And obviously these trend lines will get drawn in on either the day or the 4. It doesn't matter. I just want to see if the trend is breaking or changing. It'll be very close. It'll be very similar because you're looking on the short term with these trends at the end of the day. So I know that this trend is broken. I know that trend is gone. The reason I've left the line in is in case this comes back down. I know where the level is for retest. If it does come back down, it will come back down to these levels here, or it will come back down to that gap and bounce off of there. Hopefully it'll just go straight up to the moon, which will be fine because we are kind of in the trade. We don't want to lose confidence in our trade based on all these different little things that come in. That's why I say, guys, don't overcomplicate too much. Don't get too many systems going at one time, because then it's like, well, you're going to be arguing with yourself like you're arguing with another trader about a trade. No two traders think alike, but you can confuse your own brain psychologically into doing the most insane things by simply having too many things on the go. So if you're trading, let's say you're trading support and resistance, you're trading with trend lines, then you add in FVG, you start trading with gaps, you add in an MACD, you add in volume, and then you throw in Fibonacci, and you've got a million lines on your chart. It's just a dog's breakfast. And you're looking at it thinking, what do I do now? Because that one says I must go long, that one says I must go short, that one says I must hold. You just get so confused. You just don't know which way to go with your trading. And then you don't pull the trigger because you can't pull the trigger because you just don't know which way the market's going to go. It confuses the absolute hell out of you. So, at the end of the day, like this as well, for example, even this, because now I've got my normal support and resistance and I've got my trend support and resistance. So now what have I done to myself? I've said, ooh, it's broken through the trend resistance, but wait a minute, there's a normal support that it broke through last time that's in the way. So now I'm holding on because of this. You see, if I only had the trends, I'd probably have taken the trade long ago. It's just a question, because the market's 50-50, you're just looking for a system that's going to give you the high probability that it's going to go the way you want it to in the first place. And you're not going to make money off the system, guys. You're going to make money off the strategy at the end of the day. The strategy is to make your money on the wins. Win rates don't make you money. How's it, Elaine? Good to have you back. Yeah, so as long as you guys realize that it's not, that's why the systems don't make you money. I think I told you in the last videos that every single system works. All of them work. Every single system out there works. Every course that you go on will give you a system. That system will work. There isn't a system out there that doesn't work. The question is, can you apply that system? Will you be able to apply that system? Will you be able to make money from it? And it's not the system you make money from. It's the strategy that you make the money from. So even if someone teaches you a scalping system, it can make you money at the end of the day. It works. They all work. But the application of it is where it goes wrong. And that's where the issues come in. How much money are you prepared to risk on any one trade? For example, like I said earlier, if you've got a 5-minute thing going here, are you prepared to risk the same amount on your 5-minute trading, risking on 5 pips or points, against what you're risking on a 4-hour trade with maybe 100 pips or points to your stop loss? Are you prepared to risk the same amount of money? Or are you going to divide it by 10 to reduce your risk, and then you have to take 10 trades for my one trade? I don't know. That's the thing. How much risk can you take How much can your psychology take when you're trading? How can you apply your strategy so that you can make a profit? Are you able to apply that strategy and make a profit, or is it going to drive you insane? And I can tell you, if you're sitting on, and this is where people go wrong on the scalping and the 5-minute trades and the 1-minute trades, is when you're doing that, 9 times out of 10, you're going to sit and watch the chart 100% of the time. And any time that you're sitting watching a chart 100% of the time, it will sway your way of thinking. It'll sway your psychology. It'll sway you into believing you did the wrong thing, or believing that you should have done something else, or maybe this is not working out. It'll sway your decisions. It'll make you take trades that you don't want to take. It'll make you revenge trade. It'll give you FOMO. There's so many things that it'll create in your trading lifestyle if you're trading on a lower time frame. Whereas if you're on the higher time frames, you walk away, you leave it, you don't see it, and it doesn't move that fast. The movements are tiny 9 times out of 10. If they are big, you'll feel it. But imagine a big one on a 4-hour. Imagine what that looks like on a 5-minute or a 1-minute chart. Aussie dollar, Great British pound. Aussie dollar, Great British pound. And do I not have it here? Why is it not showing me? AUD, GBP, GBP, AUD. I got GBP, AUD. Let's see. GBP, AUD. Let's see what we got here. I hope this is on a 4-hour. Yeah, it's on a 4-hour. Let's take it to a day. And let's take it to a line chart. And let's just see what we've got here. And what I'm looking at here, see if we've got anything to the upside here. You know what I will do? Short-term trend line. Just put it up here. Just have a look. Just for interest's sake, okay? Just to see if it breaks through that. And then also what we have is a standard, looks like a support over there. Looks like it's creating a support there. Let's just see what we've got. So that's the day chart. Take it back to the 4-hour. There's a short trade developing on there on the Great British pound, Aussie dollar. Looks like there's a short trade developing on there. Candle hasn't closed yet. Problem you do have with it is its target is around the 204, 2035. Stop loss at 206. Yeah, somewhere up here. Yeah, looks like you've got a short trade developing on that. It looks like it's crossing to the other side. Yeah, it'll be a short. I prefer shorts, Shane, because shorts pay you. You don't pay them. It's actually, it costs you less to have a short. In case you guys haven't figured that out with leverage trading, you pay your fees. When you buy, you pay. When you sell, they pay you. I'm not sure how it works for these funded accounts, but with cash accounts, that's how it works. They pay you. So I prefer the short side of the trade if I can have it. If you guys want to take a trade on this, we can. So we can see how we take a trade. So what we've got, big red candle. It's come out of here. There's still 3 hours left on that candle, so hopefully it doesn't go against us, but there is a red candle there as well. So if we take a short on this, it is actually quite simple. We just click the stop loss and we say, where would we put our stop loss on this particular trade? So what I would do is say, okay, let's just look at it up here. Maybe 206.5, 206.535, 206.535 on a sell. So I'm going to say 206.535 on a sell. And then what you want to do is you want to make that $250. We don't want to lose more than that, because that's the risk that we are looking at. That's far too little. Okay, let me just change it manually. 0.5 too much, 0.3, 0.3 lots, 100%. You don't have to make it exactly 250. 235 is fair. So that will be your stop loss. And if you want to take a profit, where are we going to take profit? We're going to take profit at 204. So we're looking at a price of 204. 1.99 is pushing your luck a bit. 2.04. How does... Ooh, yeah, no, we don't want that much. Okay, let's take all that rubbish out of there. Boom, 2.04. And that's not a good trade, because that will leave us with a 1-to-1. We don't want a 1-to-1, do we? So you're going to need the stop loss a bit closer. Mind you, we can put the stop loss here, if you think about it, just above there, which is 2.05738. Let's see if that works. 2.05738. 2.05738, and then we can make it 0.6 lots. No, 0.7 lots. We get a much bigger trade, 210 bucks. That gives us a $555 profit. Yeah, that looks fine. We'll just stop loss it over here, which is fair, because it's behind that trend. And that's a sell order. So you can put that in as a sell order. Great British Pound, Aussie dollar, and we'll add it into our... Ooh, that's a big swap. Wow, look at that. What they said in those swaps. Okay, there you go. All right. Right. Chris, what area are you from? What country are you from? And whatnot, because that makes a big difference to the broker that you're going to use for your cash account. Just remember, this is the funded trader account, the funded trader markets account that we're using for this group here. This group, we opened this $25,000 account so that you guys could take the trade. So you'll notice that Shane asked if we can have a Great British Pound Aussie dollar trade, and we've taken the trade based on Shane's information, and we're taking the trade together as a group, because this is a learning group. Everybody learns how to trade here and what our system is all about. So that's why this account was opened. And the reason this isn't a normal cash account is because if it all goes pear-shaped because of the trades, then I'm not losing $10,000 or $20,000. Then I'm only losing the money that you pay for these funded accounts. But these accounts come from, let me see if I can get onto there and actually show you the, okay, just hang on a sec. Excuse the ums, because I've got to figure my way around this stuff again. This always takes me a second, guys. This always takes me a second to work all this fancy technology and stuff out. But yeah, these accounts come from here, from these guys, which is funded trader markets. There is a link down there, by the way. And what they do is they offer you, the reason we use these is because we can trade our own way. We can keep the trades over weekends. We can trade through the news, 100% profit split, all the rest of it. And these are the accounts, and they're very cheap. Okay. And I always suggest that you don't leave the money in there. If you make a profit, take your money and get out. You can have instant funding. You can have two-step evaluations. You can have one-step evaluations. Go through it. If you're interested in an account like that, if you don't have $25,000, $100,000, whatever the case, you can use these types of trades, these types of accounts, and they will do the trick for you. So keep that in mind. I just thought I'd do that. And while we're here, let's have a look at the news. And the Chinese tech stocks fell off the brink of correction. Shell up shareholder distributions. If you're an investor, that's always good. Nvidia is doing better today, which is always great. And then Blackstone's John Gray warns against knee-jerk reactions to tariffs. You're always going to get those knee-jerk reactions. Somewhere I saw that BlackRock debuts Bitcoin exchange. Quite interesting. And unfortunately, the Samsung Electronics CEO dies of a heart attack at the age of 63, which is unfortunate. Very, very unfortunate. So yeah, news. There you go. So yeah, that's how you, and then, but if you want a cash account and you want to use a cash account, You must choose a broker that you are comfortable with in your country, that works for you, someone you can deal with. As I say, over the years, I've always chosen brokers that I felt comfortable with. There is one particular broker that I've been with for nearly the whole 30 years. And, I keep mentioning names. I just mention the names and it's all that. Okay, so Chris, my broker's not going to work for you because I'm in South Africa. As a cash account in England, you can look at IG, you can look at, the people that own my broker here in South Africa are from England. That's Purple Capital. So you might want to look at that. In South Africa, it's GT247. Actually, I think you can get them in England, GT247, excellent company. And then there's a few others in England. There's a few guys here. I don't know if Kevin's here. He's also there. He's got some brokers up there that are quite interesting. Look for a broker that's close to you, a broker that you've got access to, a broker that you know has been around for a number of years, because you're putting your money in there. And normally when it's cash money, you're putting a lot of money in there. So I always say, if you're going to open $100,000 account, you want to know that they're not going to close tomorrow with your $100,000. So that's important. What I also say as well is, if you make a profit on that $100,000 and you make it $150,000, do yourself a favor, take the $50,000 out and keep it at $100,000 account, because that's what you're risking. Don't let it run to $1 million. That's just nuts. And it's the same with these funded accounts that I talk about as well. I mentioned the funded account. Now, you pay $100 for an account, you got a $25,000 account, and it makes a profit. And it makes $1,000 profit, makes $500 profit, makes $300 profit. Take the money. Tell them you want the money. Because then guess what? Your account's free. And if they do close down, you haven't lost a cent. You see what I'm saying? Don't leave the money in there. Don't try and build this account up to $50,000 and leave all. I've seen some guys on YouTube talking about prop firms, because prop firms were quite controversial for a while. And they're saying, oh no, I lost $100,000. And I'm thinking to myself, how on earth did you lose $100,000 on a funded account? Did you actually leave $100,000 in a funded account? Are you insane? That's not something I would do, to be honest. I wouldn't even leave $1,000 in a funded account. I'd take my money as soon as I've made it and put it in my bank account. There I know it's safe. Then I know banks close down as well, but 9 times out of 10 they don't. And I know the money's there. And then the account that I've paid for is now, it's free. I haven't lost anything. And if I make money from month to month, then I just take that money and I take it out. You can withdraw once a month on usual situations, and once a month you make sure you make that withdrawal and take the money out, man. Easy. Don't leave it there. People worry about, the account's going to close, the funded account's going to close, funded trader accounts are going to close. Now this one's going to close, that one, FTMO, that one. Guys, you've paid $100 for the account, $200 for the account. You make $500, take the money out. You got it. There you go. No problem. Issue solved. Then also this scenario with cash accounts, I've seen guys start a $50,000 account, and then they leave it and leave it and leave it and leave it, and they leave all the money in there. And then the broker goes belly up and they've got $1 million in the account, and it's gone. That's also crazy, guys. Take your money out. Choose your account size. Decide, listen, I want my account to be that size. That's how much I'm going to trade with. End of story. And take all the rest of the money and go and put it in a real bank account if you want to keep it. Okay, there you go. I know a lot of people don't like IG much, but or because they ask a lot of questions, but they are a very good company. I must say they're quite decent, but they are expensive as well. Just ask the other guys what they're trading with, what other companies and whatnot. There's some nice companies in the UK. There's a lot more companies in the UK, or brokers in the UK, than there are here. And if you can, closer to the town that you're living in, so you can have lunch with the guys if you need to. that's always handy. You know, they get to know you, you get to know them, especially if you've got larger sums of money. It helps you to feel more comfortable with regards to, you know, investing money with these guys or whatever the case. And you'll find many of these companies don't have thousands of employees. You know, they got, you know, 10, 20 employees. There's not a lot of guys sitting there. Yeah. But you know, you can phone them and you can take your trades. It's not like funded trader accounts where you can only really trade what you see on the computer screen. You got digital and that sort of thing. With real brokers, you can actually pick up the phone. You can actually speak to them. They can give you advice. They can, you know, help you along the same lines. And if something goes wrong with your platform, you can also call them and say, take the trade for me, whatever the case. I need to get out of this trade, sell it, whatever the situation. Yeah, like Shane says, I've used IG. I still have an IG account, actually. Big problem with the IG for us is moving money between South Africa and England is a bit of an issue. But they're very expensive, but reliable and trustworthy. And this much I've always found with them. They've been around for so many years. Very trustworthy company, very reliable. And I've got nothing against them. You know, there's so many cheaper options, but in Afrikaans, we have a saying, buying cheap is expensive. And I'm not going to repeat it in Afrikaans because you guys will laugh at me. But anyway, yeah, it gets expensive. You know, you get the discount and then it just backfires on you so badly. You know, so just be careful. Just be careful who you choose. Make sure it's a reputable company and make sure they've been around for a long time. If you're opening a cash account. Like I say, if you're opening a funded account, you can flip a coin and choose whichever one you like. I like these guys because, like I say, they allow you to trade your own way. You can trade over the weekends. You can trade the news, and they're very relaxed on many of the rules. So, you know, that's why I use these guys. So it's easier to teach you guys because it's a bit like teaching you on a cash account. It allows me a bit of freedom as well. And but yeah, there's limitations. You can only lose so much per day, drawdown, all that sort of stuff. You got to get used to that. But it's a cheap way of trading. Yeah, you don't have to spend a fortune. Okay. Ali, how are you? Yeah, how are you, man? Good. Always good. Can't complain. Never complain. Oh yeah, I forgot about black bull markets. They're quite popular. Yeah, I see they are quite very, very popular. Popular company. A lot of guys enjoy them. So yeah, there's an option. Good for small accounts. Yeah, they seem to be okay. They're reasonable and not bad at all. Most brokers won't discriminate against you for having a small or a big account. You know, they're quite happy to take on any size account. You know, in the old days, they used to have a minimum entry point. You must have this amount of money to open a trading account, so to speak. And you're like, oh, I've got to have this amount of money to get my account open, you know. Whereas nowadays, if you've got $0, rands, whatever, you can open an account. It's no problem. You know, you can open an account with nothing these days. They just want you to get the account open because they know some money will come from somewhere down the line. So they're not too concerned about that. In the old days, they were, though. In the old days, they used to be like, yeah, and we've got to make sure you got some bucks before you can trade. Now, IG, I think, is still a little bit like that. They're a little bit iffy, you know. They want to know that you got some income. They ask a few strange questions and what have you. So, yeah, do be careful on that front. Guys, in no ways, means, or forms is that any form of advertising, marketing, or anything like that. You guys asked the names. I'm just throwing them off the top of my head. I'm no way at all associated with these companies whatsoever. They accept the fact that I do have accounts with these brokerages and whatnot. That's all. So yeah, no, just bear with me on that one. It's like the investing as well. I leave a link down there in the description for the investment account for South Africa. But it's just that I'm invested with them, and I can give you guys a link to it. But further than that, there's no bonus in it really. I think they give me some points for getting, you know, if somebody clicks my link and goes on there and starts trading, maybe I'll get a discount somewhere down the line or something like that. That's all. But not from trading, guys, not from mentioning IG or GT or anything like that. I'm no way associated with that. This guy asked, why most of your trade breakdown are for members only? No, that's not true, dude. That's not true at all. I put 3 videos out a week, which are training videos, which are for everyone, completely free. And I put another 2 live shows up a week, Tuesday and Thursday, which is for everyone. And you guys get a lot of education off this, totally free. You know, the reason I've got a members area, which YouTube promotes, by the way, is basically I opened the members area because it's a great thing to have. It helps the channel. If anyone wants to donate to the channel, it's a great way to do so. And it helps us grow the channel as well. So it makes it free for me. So I don't have to pay to make this happen anymore. And, you know, at the end of the day, isn't it fair that the members get something special? So, you know, those guys who pay that membership get a trade breakdown every single day. And it takes time out of my day to make that video every single day. Every morning I go in, I research the markets, and I put my research out there in a video every single day. Time out of my day. Don't you think it's fair that that should be in a members area? You know, come on, guys. Let's be honest. Let's be fair, right? Okay, it's time out of my day, and I take a lot of effort to put it in there. It's a video every single day, and also the trade breakdowns and all the rest of it. So, yeah, you know, that question, I get it, but come on, you know, let's be fair. I do a lot, and I do it for free. Okay. Yeah, no, Shane, there's a lot that I do. I don't need the money. It's free, you know, but I'm just being a little bit sort of like, there's a limitation here. I put my time into it. I put a lot of work into it, and I want to have a members area. So, and grow a crowd and grow a membership and what have you. And that's what it's for. And at the end of the day, I just feel that those guys should get something extra, something a little bit more. And that's why I do it. Why don't I do it for free? Yeah, I get it, but you know, there is limitations to it as well. Hey Rob, during your long tenure as a trader, how did you maintain the consistency to find setup every day? Is it okay to take breaks here and there? Actually, in all fairness, yeah, it's a good idea to take breaks here and there. In fact, there's been once or twice where I've been busy with another project of some nature, maybe a business or whatever the case, where I've actually had to stop trading, where I've actually put trading on hold for a while and just kept my investments. Investments, obviously, you just leave them going forever, but the trading accounts, I've actually put them on hold, left some money there and just left it standing with the view to coming back to it. And sometimes I've left them for 6 months, you know, and then come back to them and carried on for simple reason that you get another project going, you get busy with it, and you just can't concentrate on both. But in that time, you tend to find yourself picking up a phone or picking up a computer, looking at it and going, oh, yeah, I'll take that trade, you know, and you still do it. But yeah, no, you do take breaks. You do take little breaks in between. But the consistency to keep going, this is addictive. You never walk away from it. In all the years, I've never really ever been able to simply walk away from it. That has not been a thing. I've tried, sort of like saying, okay, yeah, let's just leave it and do something else and just leave the investments and whatnot. And you, after a while, it's like riding a motorbike. You're like, oh, I've got to go and play again. It's a bit like a computer game. You just, you know, seeing the profits and having the fun and taking the trades it's kind of addictive. You kind of enjoy it and you always end up going back to it. So spotting the trades every day, that comes naturally because I've been doing it for so long. So for me to go through the trades every day, specifically for you guys, so that you get the video every day and whatnot, it's easy for me. It might be much more difficult for a new person, but who's someone who's new to trading. But for me, it's like comes naturally, and I see it on a daily basis. The picture's there, doesn't go away. And if I do walk away from trading for any reason to be busy with something else, whatever it might be, then it's constantly on my mind. It doesn't go away. So I always end up going straight back. So yeah. Yeah, I know it wasn't a criticism. Don't worry. I understand. Don't worry. I get it. I'm just pointing out. Yeah, that's great. Yeah, all good. So as long as everyone gets that, that's great. And there are reasons for everything, and it's not, it's like I say, it's not that I'm trying to be funny or anything like that, but yeah, end of the day, you can't do it all. Yeah, it's you put a bit out there. It's only fair that you get a little bit back. That one's going against us again. That's fine. US 5 minutes. Okay, that's fine. Euro, US dollar. That's fine. Okay. Right. So yeah, many of the trade setups are out there. They're out there, and they're out there for free. And if anyone wants them, they're available. But like I say, yeah, the members side is there for a reason. Okay. Good. And we've discussed Bitcoin, and I wonder, the chap who asked about the lines, if he's here, I did describe the lines for you guys. I did go through it. So, coming out of resistance, red candle, green candle. So that's at the beginning of the video, if you didn't pick up on it. It is there. It is available for those guys who want it. Okay, let's just see. There we go. See, these things, when you haven't looked at them for a long time, you end up with your research going way back. Just got to pull it forward a bit. We are, or were, long on Brent, and we got taken out earlier on a sort of trailing stop. Yeah. Okay, so what actually happened here, I was long on Brent, and it was going well, and I put a trailing stop behind it because of this supply of money here that it ran into. And then it went back, took the trailing stop out, which was maybe too close, and then it carried on going up. But what I'll wait for now is for it to break out of this this supply level here, to break to the upside. And if it breaks to the upside, then I'll get long again for the rest of the run. As it stands at the moment, it could turn around and come down out of this level. So I'm just waiting for that at the moment. Great British Pound, Aussie dollar was going just wonderfully. Now it has turned against us. You see, I didn't wait for the candle to close now. Well, we'll see what happens. We'll see how it goes. So yeah, Brent, yes, long. It is a buy. Brent is a buy. But like I say, we got taken out by the stop earlier on, the trailing stop earlier on today, which we made $100 profit on, I think. Yeah, 115. Okay. But I just want to see if it's going to break up. If it breaks to the upside, we can get another nice long trade with all that area up there. Just be careful of that supply of money there. That could be a tricky scenario. Let's just have a look at it on the lower time frame, just out of interest. Sniper entry. Yeah, I see what I'm seeing here. Even on the lower time frame, you've got money down here at the 73.20. So it might just come back a little bit. Let's just see. Okay. I love your terminology, Shane. You said it last time as well. Always do the opposite of what I say because you always get it wrong. No, man, you get it right quite often, I'm sure. Don't worry. You just got to take the trades. At the end of the day, like you say, that I've seen that a lot, where I've said it as well. At one stage, I used to say, gee whiz, man, what am I doing wrong, And then you'd get it right for a while and you think, oh, this is great. And then the aha moment comes to you when you realize that actually the market's 50-50 and it's not you, it's not the system, it's not anything, because you go around looking for new systems all the time to try and make it better. because you think you're calling the market wrong. But effectively, that's what the market does to you. It drives you insane. The market's 50-50. Whether you had a system or not, you just have to say, I want to take a trade. Which way am I going to go? Choose a trade. And if it goes your way, so be it. If it goes against you, so be it. All you got to do is put your risk in place, put your risk management in place, follow the strategy that I show you guys on a regular basis, and then you'll probably be okay. It's like I said to you, every single system known to mankind in the market, every single one works. They all work. They've all been back tested by some genius. Everybody will tell you their system's the best, but they all work. They all work fine. Some of them are a bit lagging, like the ones with indicators, or they have lagging indicators, so it's a lagging trade or whatever the case. But at the end of the day, every single one of the systems work. So it's not you that's going wrong. It's just one of those things. All I do is I look for high probability and I look for liquidity. That's my whole basis on the system. The strategy, as you know, is a completely different ballgame. That's our business plan. We put a stop loss in place. We keep the stop loss the same, and we try and make more profit. But the system, all I'm looking for is liquidity. Where's all the liquidity? Where's all the money? That's all I'm ever looking for. Nothing else. And that said, when I find the liquidity, I'm looking for what's the high probability of that liquidity. What's the high probability? So for me, the reason I put a trailing stop on the Brent was the high probability was it would hit the supply of money and then shoot down. That hasn't happened because it's 50-50, but it still could happen. So now my high probability is it's in this level. If it breaks to the upside, the high probability is it's going up. And if it comes back down and comes out of here, the high probability is it'll come down to about this level of the 72s. You can buy in again and it'll probably go long. All I ever do in the market, to simplify it, is I'm looking for liquidity. I'm looking for the area where the money is, and that's easy. The support is where it keeps getting to, the resistance is where it keeps getting to, and the supply of money. And the trends, breaking the trends. Obviously, if it breaks the trend, you know it's changed direction, or you trade within the trend. But what am I looking for? Always looking for liquidity. Just looking for money. That's all. The 90s. I'm probably still living in the 80s, mate. Yeah, the videos are as simple as I can possibly get. And yeah, I'm actually still living in the 80s. You know, at the end of the day, I try to keep it simple because when we started trading, things were simple. Things weren't complicated. We didn't have all this fancy stuff that you see on the charts now, and all these fancy different systems and all these fancy circles and dots and goodies. I mean, some of the indicators that are available now are insane, okay? And all we had was draw a line, and if it's below that line, you sell. If it's above that line, you buy. We didn't have leveraged trading. Yeah, trading as I call it. We didn't have that. We used to trade with one-to-one money. If I had $1,000, I traded $1,000. That's what I had. I couldn't trade more than that. And if I made 10% on that, I was like, is that all I made? You know, that was kind of it. So that's where you learn to invest, because you kind of learn that investing is the way to go. What they were trying to teach us is that when you put your money in, you can make money while it's going up and take it out while it's going down and make more while it's going up. So you could make more on the charts because the chart was never a straight line, is what they try to teach us. Over time, you realize that it's just time in the market, and if you're investing, you just buy, set, and forget. But then along came computers, which was fantastic. We dreamed about having computers. It was such a thing to get computers. I mean, I was like, wow, computers, wow, amazing. And then we started trading on computers with dial-up internet. Can you imagine? Can you still remember the sound of a dial-up internet? The one you couldn't leave on because it would destroy your phone bill? That one? If you can remember that, give me a thumbs up, guys. Means you're my age. And then we would get on there and we would do a few trades and we'd do a few things. And that was the beginning of online trading. Because we used to trade on the phone with a broker. You used to know your broker personally, man. Now, this became what it is now. It grew to new heights. And a lot of traders at my age that started at my time went through the same as me, where you got all this fancy stuff and you got involved in all this fancy stuff because we thought, wow, this is fantastic. This is amazing. Imagine getting involved in all this fancy stuff. And you start trading on, like you say, 5-minute charts, and even 15-minute charts were fun. 1 minute, and wow, it just gets insane. And you start making all the mistakes, and then you figure it out. Go back to basics, go back to the beginning, go back to living in the 80s and trade the normal way. And then you realize why you need to do that. But the youngsters or the young guys don't know. They just plowed in, and they started getting involved in all these systems. And unfortunately for the young guys, they don't see traders. They don't see human beings. They only see computers, and they only see candles. They only see lines. They only see systems. So then they're convinced that the system makes the money. They're convinced that lines will make the money and charts will make the money. And they don't realize that the market's more subjective than you will ever believe. Sandals. Shane, yeah, absolutely. Old toppies. Yeah. There's a lot of thumbs up. You guys remember the old dial-up internet. My favorite thing on earth. Yeah, totally. If you left it on, dude, wow, what a phone bill. Goodness me. And in those days, I didn't have money. So, I got a phone bill like that. It was insane. In those days, you're starting out and you're trying to invest and whatnot with a few bucks. And I can tell you it was scary. These days, it's the electric bill. Gee whiz, you don't want to see my electric bill. That's insane. Yeah. Yeah, not much younger than me, Shane. Yeah. Retired from investing into stocks. Yeah, look, I've always traded, but investing has always been the big win for me. The trading has always been something that I just enjoy doing. It's just something I enjoy. If you want to make more money, investing is the right way. It's the best way. But I just enjoy trading. It's fun, you know. Yeah, when you're 50, I'm already touching 60 here, so I'm really old. So yeah, I'm heading for my pensioner's card. I can go to the shops and get my wee discount. Yeah. I don't have to say discount for cash anymore, and I can say, yeah, a little pensioner's card. Give me my discount there. I love discounts. If we're still around, yeah, Shane. Yeah, I wonder. Hopefully, yeah. If I am, I'll probably be, forgetting everything. I've always, I can't imagine that in 10 years' time I'll be hitting those ages where, in the old days I used to think there's no way you're reaching that age. And now you're cruising towards it. It's insane. Absolutely insane. Life flies by. If you're young, believe me, guys, understand this one thing, that you blink your eyes and it's gone. It's gone past. It goes quickly. Enjoy it while you can. Have as much fun as you can. All my life, I've been very fortunate in the sense that when I was younger, I said, I'm not going to go to a corporate company and work for a boss all my life and all the rest of it. So when I was 27 years old, I packed it all in, I walked out, and I started my first business, and obviously got into trading as well. And I can tell you, it's I've never looked back. It's been hard work, and there's been a lot of things going on and whatnot. I've always had this thing where, when people have got a salary, they can't wait for the end of the month. And I've always had the opposite feeling. When the end of the month is coming, you're like, "Ooh, I got bills to pay, I got staff to pay, or whatever the case." So you start looking at that and thinking, this is tricky. So you get the opposite end of the scale in that sense. But on the rest of it, I've always had no one to answer to except myself. The buck stops here, and that makes life a hell of a lot more interesting and a hell of a lot more fun. So if you are young and you can enjoy it, just remember you're going to blink your eyes and it's going to go past. Do as much as you can to enjoy it, obviously within your means. I mean, I don't mean bankrupt yourself and end up in trouble, but go and have fun, man. Go and have fun. Go and enjoy it. Spend the money. Well, make the money and spend the money. Have a bit of fun, you know. Uh, Jay Beans. Don't tell everybody you used to sell pirate CDs in those days. You're going to get into trouble, man. They're going to come after you. Yeah. Yeah, no, look, have you noticed the Japanese guys get much older? Yo, those guys. I noticed a few of those guys reach their 90s and 100s and whatnot quite easily. Not to say, my mum reached her 90s. I mean, that was fine. My old man didn't though. Yeah. Yeah, you got to stay profitable all those years as well. I'll probably still be trading if I reach 90, but the possibilities of me reaching 90, yeah, I don't know. Not with the food I eat and the stuff I drink, no chance. Not happening, I doubt it. Yeah, be interesting to see. And imagine, sitting there with your dementia, trying to remember what trade you took an hour ago. Yeah, it could be quite crazy. Yeah. Passive income from position trading. Yeah, that's a good way to live. That's one thing I've always had since day one, is the ability to position trade, the position trading. And this is what we're doing here effectively on the 4-hour. Position trading is the best way to trade. You position yourself, you take the money, you move on. And if you can position trade and you can invest, spot on. Like I say, the 5 minutes, I don't know, Shane, that might be your downfall. If you're good at it, okay, but like I say, I tried it for many years and it drove me insane. Also, what drove me insane was sitting behind the charts and taking those trades. Because, people say, I'm going to sit behind the charts for 2 hours a day, I'm going to do 5-minute trading. But, very few people actually do that. You find yourself sitting there for that 2 hours. You said you're going to sit there, and then you sit for another hour, and then you sit for another hour, and then you look for another trade, and you end up sitting there the whole day. You always do. You don't walk away. Whereas position trading, you walk away. Yeah. Look, you know what I would say? It's like the M5 or like this. It's just the fun part. That's why I say I've always been a trader, because it's fun. I've never looked at trading as something that to make money from or to become rich from. I've always looked at trading as a bit of fun, a little bit of excitement. And if I make some money out of it, it's more exciting. Doesn't matter how much, it's exciting. Whereas the investing, let's be honest, making money is boring. The actual making money. And investing is boring. You buy a stock and then you literally have to forget about it. And how boring is that? I mean, you want to go back and have a look and you're like, I've invested in it now, what next? So trading, it gives you something to do. It gives you something to get some hype on and to watch and to have a bit of fun with. So yeah, totally get it. And I get why Shane himself wants to do 5 minutes, because sometimes you just get so bored. You got to do something. So 5 minutes is like something's happening. You can do something. There are times in my life, and I'll admit to it, where I've gone, let's just go and have a bit of fun. And I've gone and played on the 5-minute charts just for fun, because something's happening. I'll admit it. I do it as well. because you're bored. You're like, let's just go and play here. Let's go and have some fun. But yeah, no, if you want if you want to make some money, it's not the way to go. You've been trading for 2.5 years, still not consistent. Okay, Ali, what you got to do is, 2.5 years, you should know a little bit about trading by now and understand how chart movements work and what have you. The consistency comes with understanding that you're not going to make money from the charts and understanding that you're not going to make money from a 50-50 game and strategies. I mean, from systems. I mean, from these lines and whatnot. This is your high probability. You're looking for liquidity. You're taking a high probability trade. What you got to do, Ali, to become consistent is follow the strategy. And the strategy is really simple. Put the same stop loss amount, dollar amount, rand amount, whatever it is, on every single trade. So every single trade you take, put the same amount on. Now, you saw me take a trade earlier on this Great British Pound. No, what did we take a trade? It wasn't the same. Great British Pound, Aussie dollar. You saw how I took the trade. We took the order, we put the stop loss in, and I would take $250 stop loss on every single trade here. But it worked out at 235. Close enough, eh? Close enough. So that's what we're doing, right? Now, every single trade has the same stop on it. You can put the trailing stop on it like I've done here. So this one has already trailed down to 165, but it started over 200 at 250, whatever the case. It's just that it's trailing, and this one started on 235, let's be honest. And now it's at 165 already. It's trailing down, okay? It's trailing down behind it. But start every stop loss at the same amount. That gives you the first form of consistency. How do you choose your stop loss? You look at the trade and say, I want to put my stop loss there. That's where I want to put it. And then work out the size of your trade from there to the cost. Once you've worked out the size of your trade, then you've got the size of your trade. Now, the first thing you do, you've worked out what the stop loss size is. Now you've got some consistency on every single trade. Why do I choose $250 on this account? Because it's 1% of the account. And if you take 10 trades, it's an entire 10% of the account. So now you know that's a bit of consistency to start with. Then all you've got to do is work out your take profits, how you're going to take profits. You want to make more profit than you've got loss, so you want to make more than $250 if you can. But not to worry if you don't. Just get the consistency going. Get the consistency going of keeping the same stop loss, keeping the same amount of loss in every trade. Once you get that going, then you'll start getting the consistency of take profit, the amount of take profit, where you want to put your take profits. That's your strategy. Forget about the system. The system, use whichever system you want to. It's a high probability trade. Just think of it. The system is just, oh, that's a good probability that that's going to go long, so I'm going to buy. But don't just buy. Now, I've got to have the same stop losses I had on the last 20 trades. Exactly the same. Not different. Make it the same. That's your first entry into consistency. Once you've got that right, then you're already consistent with how much you're losing. Learn to lose. Then your wins, try and make them more than your losses. That's your next level of consistency. And eventually your consistency will come. 2.5 years of trading, the lines and the squiggly lines and that you should already have a pretty good idea of what's going on there and what a high probability trade is. So you should be comfortable in that area already. Where you've got to get your skills right is in the strategy and in keeping the loss the same and in getting that consistency going. Once you get that going, you'll be okay, dude. You'll come out the other end, believe me. Because I live here in Oz, my position trades are held overnight. You know, a funny thing, Shane, when you say you hold your position trades overnight, I do too, but I don't advocate. So I don't advocate holding trades over the weekend. I don't advocate holding trades overnight, but I do it all the time. I do it all the time because I'm a position trader. But what I do is I measure the risk, particularly on a Friday afternoon. I kind of just glance at the news. I glance at what's going on in the world, because 9 times out of 10, if something big is happening and something's going down, and this is from experience, okay, in the past, the crashes of the past, in 2008, I think there was a 97, and before that, and I've gone through them, and every single time there's been an inclination, a hint on the Friday when things started moving heavily. And when I see that, I'm like, hang on a minute, I don't want to be long on any indexes here. Let me get out and I'll get back in on Monday morning. But if it looks calm and the weather looks great and everything looks fine and nobody's making any noise and it doesn't look like something's going to go insanely wrong over the weekend, I'll take the chance. It's a chance you take. But when you take that chance, understand the following, especially if you have a cash account, right? If you have a $100,000 cash account and you're invested in, say, the US 500, everything looks calm, everything looks great. And over the weekend, something happens and the US 500 opens up on Monday morning and you're $200,000 down. Do understand that they're not just going to want the $100,000 in your account. They also want the other $100,000. It's a margin call. So you'll owe them another $100,000, okay? Just understand that if you're holding over the weekend. So when you take the risk, measure the risk and make sure you're okay. Make sure that the possibility of that happening to you is not something, because I've seen it happen to one or two old friends. I've seen it happen to one or two other people as well. And they lose their house, they lose everything because they can't pay the money back. It's insane. Be very careful of those margin calls on cash accounts. On a funded trader account, can't happen to you. They just take the money you paid for the account and close the account. Okay. Can you go over how to trade trend line from daily down to the 4 hour and how to enter if the trend line is broken with the green candles? Understood. And do you trade with personal funded account? I just joined a community that cost me $100 a year, hoping to learn and grow there. Really good people in it. I was the one that asked the question about whenever it is. My question was, it breaks the line, the candle is green. All I use my own account, and there are many rules on prop accounts. Okay, so I did go over for you the question regarding the candle green or red earlier in the video, but what I'm going to do, the person is here who wants to know about how to go about trading the candles coming in and out of the resistance and that sort of thing. So I'm just going to go over that again. How to enter and how to exit. Okay, so let's just go over this again so that we all understand and we all get a basic idea of what is going on. Now, if you, okay, firstly, you know how to draw your trend lines in and your resistance and support. I take it, right? So we don't have to go over that. So all I got to do is show you how to actually take the trade. Now, for example, this is going into support. This is now support, right? So that's a red candle going into support. It's gone into support. We're not going to go short because it's above the support. We're going to go long on a green candle closing out of this because it's going up out of this. So there's a green candle, goes long out of the support. So we take the long trade. Once again, we've got the red candle going into the support. It turns around, comes out. Green candle comes out of the support. You can take the long trade. If you didn't take the long trade and you waited for the next candle and it was red, don't trade. And it was red, don't trade. Goes green, nice green candle, comes off not only the support but also the trend support line. You can take the long on the green. The next candle might go red. It's going to happen. This is called a retest. So this is up and a retest. Don't always wait for the retest because they don't always happen. In many cases, they just go straight up like this. See over on this one, just went straight up. It didn't come back and retest here. It just went straight up. That's why I don't wait for the retest. The rule is wait for the retest. I break rules. I'm not interested. So for me, I'll rather, if I see a green candle, I'll take the trade and I'll go. So in this particular case where you've got these trend lines, I'm going to take the trade, and I'm going to take the trade on a green candle only long, and on a red candle, I'll only take the short on if the candle is red. But how do you take these trades? So let me see if we've got anything here that makes any good sense. And here's the US 500 that I took a long on. Now, probably a bad example because I took the long too early, right? I should have waited for the green candle to come out of this, what is now resistance. It was a support. Now you see it came down, it broke through the support. Red candle out. I would have taken it on that second red candle there. Not the third one, the second one. Sometimes I might even have taken it on the first one if I'm feeling a little bit, high risk, let's say. But if I'm more careful, I'll wait for the next one. And then I'll take my short and off she'll go. And then I'll look at my trailing stop and what have you, and it'll get taken out. What happened here? I drew in a trend resistance. Here's your trend resistance running all the way down here. Now, why did I draw that in? I drew that in just to see when the trend breaks, because as you know, we trade three ways. We trade with the trend. We trade in a range. A range is when it stays between the two lines, up and down. We trade at the top and the bottom of the resistance and the support. And the third way is we counter trade the trend. Now, the only way to counter trade the trend, because you don't know if it's expensive or if it's cheap, it's not a supermarket, you're waiting for the trend to change. The only way to know that the trend has changed is if you have a trend resistance in and the price goes up and it breaks through that trend resistance and it heads to the upside. Now, if I didn't have this support drawn in here, which became a resistance, I would have taken this trade immediately on the next green candle to the upside. I would have jumped in and gone for it if this wasn't drawn in here. But because this was drawn in here, I was waiting for confirmation. And in fact, I was waiting for confirmation of it coming out of here and giving me a green candle above it. But I got impatient and I got in at this level because I saw these highs over here further back. So I thought, looks good, got in, and we've taken a long trade on that. Probably should have waited, but it's okay. That's fine because this has broken. So the trend, it's counter-trended, and it's gone up. But the basic question is, should I take a long trade if this is a red candle? No, wait for the green candle before you take the long trade. Now here, I took the long trade early, so I took it on the green candle. So if I'd waited and it got these red candles, I wouldn't have taken it. But if this green candle closes and it closes above here, that would be a sign to take the trade. So you would take that trade. Another good example, Euro US dollar. We went short. Why did we go short? There's a lot of confluence on this particular product, okay? So what happened here, Euro US dollar was extremely bullish and it went all the way into the resistance. And it's sitting in the resistance. And we know that it's pretty much a high for this. And it comes back out of the resistance. And what doesn't only just come out of the resistance, it breaks the support trend, which we've drawn up here. It's a short-term support trend that I draw in just to see if the trend is breaking. It's broken that trend. So not only has it broken the trend support, it's also now come out of the resistance. So what do? At that level, on that red candle, I take a short trade. Take a short trade. Now we're in that short trade, and we're in that short trade all the way down to here with a trailing stop. And it's kind of going the right way at the moment, although there is a green candle there. But, markets don't go in straight lines. They go up and down, up and down, up and down, up and down all the time. Cheers, Dave. Okay, I have noticed backtesting that sometimes it might break trend line to the top, but then when it comes back, it goes more down when the setup was good. You see, the thing is, what you have to understand that is, and very important as what I've been talking about today, is these are systems. It's a high probability trade. So I'm going to try and bring it back for you. I'm going to try and draw it back into something a little more simple, because we make our money out of trading the strategy. So as Ali asked the other, I've been trading for 2.5 years and I haven't got consistency yet and whatnot. And in the 30 years that I've been trading, I learned that the systems don't make you money because the market's 50-50. It's subjective. What makes you the money is the strategy. So to become consistent, you work out keeping the stop loss the same on every single trade and trying to make more on your profits. What the system does for you is give you the high probability trade. So if you take it back to I'm looking for a high probability trade, what am I looking for? So what I'm looking for constantly in the market on systems in a subjective world where this is not objective, this is human beings. All of these candles that you see in front of you, they're human beings. They're not maths or algorithms or any of that rubbish. They're all human beings taking trades, putting orders in the market. So effectively, when you drill it down to basics, what I'm looking for is liquidity. I'm only looking for liquidity. I'm looking for areas in the market where I know there's a lot of money that's going to turn the price around, that's going to turn the price in my favor, or it's going to boost it in my favor. So I'm looking for these liquidity areas. I'm looking for these areas where there's a lot of money lying around. And how I do that is by drawing in resistance, by drawing in support, and by checking the trend. That tells me where the money is. That tells me how much money there might be waiting, how big the area is, how many times it's bounced off there is very important. Just gives me that high probability trade. So not every single trade is going to work out 100% because the market's 50-50. So for example, sometimes you get this and you think it's going to bounce off this trend and it goes through it and it goes back and then it comes down and you think, what the hell happened there? It's 50-50. You don't know if it's going to go shooting back up. Sometimes it'll come through and it'll go back up and it'll go through, because the whole point is this line is not a line in the sand. This is not an exact science. Everything that you see in the market is neither here nor there. If you look at this resistance, it's an area where there's money. It's not an exact line. Human beings don't draw exact lines in the market. There's a whole bunch of human beings that think that this is a good area to put their order in, and there's a whole bunch of human beings that think that's a good area to put the money in, and there's a whole area here of money. It's just a general area where like-minded traders are thinking that's a good place to put my stop, that's a good place to put my order, that's where I'm going to buy or sell this particular stock or Forex or whatever it might be. So you get a whole bunch of people. The straight line for the trend is only to tell me which way if it's staying in that trend or if it's breaking out. But to get 1 million human beings to buy on one single line is impossible. General area, yes, but one single line is impossible. That's why on these straight ones I draw these rectangles, these thick ones, because there's an area here where I know there's money. On the trends, I don't draw those because I can't draw those. There isn't really a facility to draw those. Otherwise, you could draw them a bit thicker as well. But often on these trends, you'll see them break through because there's no such thing as an exact line. It's an area. It's an area that you're looking at where you say, somewhere around there is where the money is. Somewhere around there is where the trend will go and break, whatever the case. And if it breaks that, that's why you wait generally for the candle to close, because the candles are nice and long. They give you a decent idea of what's going on. But even then, if everything plays out and everything looks great and everything looks perfect, that doesn't mean you're going to win the trade. That doesn't mean the trade's going to be perfect, because it's a 50-50 game, because it's human beings. There's human beings in there taking the trades. And all it takes for this to change against you is for someone like Donald Trump to stand up and say, I am going to go and beat Mr. Putin on the head with my hammer. Boom. That's going to change immensely. Just like that. And then all your technical analysis goes out the window. Just gone. Right? That's why we have stop loss in place. That's why we use a strategy. And that's why we keep a strategy to make us the money at the end of the day. Okay. I will go over the whole thing quickly. Okay, no problem. I'm still in the trade US dollar CAD long, but it doesn't look good. No worries, right? Coral, I'll have a look for you now. US dollar, Canadian dollar, because we got out of that trade, right? We were in that trade the other day, weren't we? US dollar, Canadian dollar, short. Ooh. Okay, it's going to probably come down to this yellow line that I've got here. And it's probably going to hit support. So you're pretty close to support. So if you can afford that distance there, then you should still be okay. Your stop loss needs to be a bit further down. Then it'll probably bounce and go up. Because when it gets to this level, I'm going to be looking at taking a long trade. So while we're talking about US dollar, Canadian dollar, I'll tell you what. You want me to... You asked if we can go over from start to finish how you draw the trend line and whatnot. So your title is 24 Hours to Live. Perhaps drop your name so we can call you by name. That'll be excellent. But let's talk about how we draw the trend lines in, how we draw everything in and go from the start. So let's do it on the US dollar, Canadian dollar, and we can take it from there. So normally what we would have is a clean chart, right? So let's take it and make it a clean chart. I want to do this before the day ends so that we get something out of this. Right, so I did draw this in. I'm going to leave that in because that is effectively a support area. Okay, Ellie, great. Good to have your name. Fantastic. Perfect. Now, it's just nice to call somebody by their name. It's very difficult to call you 24 Hours to Live. It sounds a bit ominous. So, Ellie, okay, Ellie, so what we do is we'll take it and we're going to put it on the line chart. We're also going to put it on the day chart. So the first thing I'm going to do, I'm going to take it to the day chart. So now it's on the day chart. So this is the US dollar, Canadian dollar. Now you're looking at it. You've got a chart, and you can clearly see it's been bullish, and then it's gone into a range. So there's three ways we trade, Ellie. As you know, we trade with a trend, we trade in the range. So there's your range. It's in a range there. And we counter trade. This one is clearly going to be in a range, but I'm just going to draw the lines in and we can get a nice clear picture of what we've got here. And I'm also going to draw in the trend so we can see break of trend and that sort of thing as well. Now, I take it to the line chart, and most people will know why I do that here. I take it to the line chart because I like to take my lines off the closing prices, because I find that the closing prices are more accurate, but also give me a better average sort of idea of where we're going. Now, you'll say to me, but why don't you use the tails? There's lots of liquidity in the tails and that sort of thing. And you're quite correct. I use the tails. The tails are very important in my normal trading day because I can see when the sellers are getting back into the market. I can see when the buyers are getting back into the market. And I can see what kind of movements there were in the market. But when I'm drawing my lines, I prefer not to have the tails, because you get those moments where the Fed stands up and you get this spike going up and down. And actually that is almost like a black swan event. It's kind of goes against your normal run-of-the-mill range or your normal run-of-the-mill trend. So I prefer not to use those spikes. So then what I'll do, now the reason I draw rectangles in, as I mentioned earlier, is because it's an area of liquidity. It's not an exact science. There's an area here where there's some liquidity, because as I said to you, what am I looking for permanently? I'm looking for liquidity all the time. I'm looking for where the orders are. How do I know they're here? Every time the price gets there, it goes down. 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 There. So it's 1, 2, 3, 4, 5, 6, 7 times. Okay. I know there's money lying in this area. But you'll notice sometimes it's here, sometimes it's up there. It's not perfect. There's no perfect line. So you don't draw a straight line in here. Now here I did, because that is almost a perfect straight line. But you don't need that. I'm going to take that out. Let's clear that out of the way for now. So now you've got your area of resistance. Now we know that that area is where there is a rather large amount of money. And if there's an area of resistance, there's normally an area of support. And where's that area of support? That area of support is down here. Clearly, how do we know that? It broke through that area, came to the upside, it's come down, it's taken money. It's come down, taken money, gone up. It's not a strong area, but it is an area. Now, now with it not being a strong area, now I would like to draw in a trend line just to clear up the fact that this is not a strong area. There's not a lot of hits. There's only 1 or 2, okay? But it is an area. It is an area where you could say there's support there. Now, what I'll do is I'll take a trend line and I'll draw a trend line in. And my trend line will go straight through that price. I'm just going to change the color so you can see it. Now you can see on the daily, I've drawn a trend line along here. Now the trend line I'm drawing almost very short term. I don't need to draw the whole chart on a trend line. I do it very short term. I just want to see if this trend is breaking. That's all. So now it's in this range and it's breaking this trend. So as it stands at the moment, it should be a short trade. As it stands at the moment on the daily. Now what I do is I take it back. Now I've got my high probability. My high probability is, if I look at this from a daily point on a line chart, it's in a range, it's trading in that range, so I can sell it every time it hits there. I can buy it every time it hits there. And I can also see that it's short at the moment because it's broken through that general trend. Now what I'm going to do, I'm going to take it back to the candle chart. Clearly we do have a red candle out of there, and it looks pretty short. Now you see that big red candle that shot through there? That was an event that spiked it up, sent it up high, and it came all the way back down. Now let's take that back to the line chart. On the line chart, that's where it closed. Now imagine if I'd wanted to draw this resistance in on the candle chart. What would I have done? Bit complicated, right? I'd be sitting with this big spike coming out of here. Yes, there's a lot of money here, but that was a big spike which immediately fell all the way down and went into the negative for the day. There's a lot of money that got sold out there. So there was a lot of buys went in on news, and that's come flying down immediately. So this is an anomaly in the market, and you try to let it go. Try not to let it bother you too much. Your main area of money, where everybody's left their money, is here. This is where the resistance is. All the money is lying here. Now you want to take it back down to the 4 hour. And on the 4 hour, you get a much clearer picture of what's happened here. Now, all those prices are within that resistance. All those prices are within that support. And you can actually, there's your anomaly where it jumped up. You see the big gap there? It made a big gap, came down, filled the gap, and actually fell all the way down and all the way down to the support here. Now, what do we do? Okay, so now you've got, let's make this a bit bigger. Now you've got your picture on a 4 hour, which is a lesser time frame, where it's broken through that trend support and it's heading to the downside. As somebody asked earlier, what do I do now? Should I hold or whatever the case? My opinion is it has broken the trend support, but it's going to go down to the main support. And at the main support, you have to determine here what's going to happen. Is it going to break through the main support, go to the downside? Is it going to bounce off the support and go to the upside? Now, I don't have a crystal ball. And I can't tell you what's going to happen in the future. All I can tell you is I'm looking for liquidity. All I can tell you is I'm looking for high probability. So what I'm going to do with this trade is I'm going to wait for that to reach this support. And then it will tell me, like a book, it's like reading a book. It's going to tell me if I get a green candle bouncing up and going to the upside and closing, that will be a buy. If I get red candles breaking through here and it breaks through this level and gives me a red candle out, it's going to be a sell. That's as basic as it gets. Not waiting for retesting. No need to wait for retests. They don't always happen. But if you're cautious, you can wait for it if it breaks out with a red one to come back, retest the level, give you another red candle, and then you can take the trade. But that's not necessary. So now what you do is just wait for it to get here and determine which way it goes. And that's as basic as it gets. How do I know if it's going back the other way? I don't have to go to the day. I can, on the 4 hour, I can take a trend line and say, I just want to make sure that I'm in the right ballpark. And okay, so I'm drawing a trend line across this way. I'm going to change the color as well so that you guys can all see it. And you're going to say to me, Rob, but you drew the trend line through that point. Yep, I sure did, because actually I wanted to touch 3 points. So the most important part is that one, and that one. Remember what I said to you. This is a straight line. These things aren't, money is not in straight lines. It's an area. So that's part of the area. Okay. So what we've got is a trend to the downside. If this price breaks up on the 4 hour, breaks through that level, guess what it's doing? Going long. Don't want to confuse the issue. Don't want to have too many lines on the chart. But if you want to have it there, and if you want to see what it's going to do next, you'll have an idea. Trouble is now that is a triangle that's broken out of. So it's a bit scary for the guy that's long, because this could actually be quite a nasty short. So for a while now, it's been trading in a range. Sell off the top, buy off the bottom, sell off the top, buy off the bottom, sell off the top. So we sold off the top there, and then the trailing stop took us out, hit that, and it's come all the way down again. And if it bounces off here and does bounce up, we will go long again because it's in that range. But if it breaks through that, then it's breaking the range. I hope that gives you a little bit of insight as to how we're going. We've got the live shows Tuesday and Thursday, so we can always go over it again on Thursday. Okay, so why don't you enter since it broke the trend line in red? Otherwise, thanks. Okay, you see here, this one, where it's broken the trend line in red. Why don't we enter? Okay, why don't we enter this trade where it's broken the trend line in red? Number one, there's 2 hours left for that candle to close, right? You could have entered here, but why didn't I enter here? Because I probably didn't see the trade. Maybe I wasn't watching, whatever the case. On this candle though, why aren't I taking the trade? Because there's 2 hours left on the trade, on that candle, firstly. Secondly, the risk to reward is poor. Okay, so understand that my risk is all the way, if I sell this, all right, my risk is all the way up here at the 144s, 144.6, okay? That's where my risk is. That's where my stop loss is going to have to be, maybe even above that. Here, my reward is here, right next to it, at this support level. So my reward is this size, and my risk is this size. So no trade. You have to look at your risk to reward when you're taking a trade. You can't take a trade with a $250 risk with a $50 profit possibility. If you're looking for a profit possibility, you want to be looking for the $250 profit for a $50 risk. That's kind of where you want to be. So if you're taking a $250 risk, you want to be making like $400 or $500 profit. So you want a bigger profit. So you're looking for a better risk to reward. So why wouldn't I take this trade? Because this support is in the way. And it's telling me that my reward is tiny on this range because it's already at the bottom, and that my risk is much higher. So what I will do is I will wait for the green candle out of this range, because it's in a range, remember? I will wait for a green candle out of here, giving me all that reward to the top and a tiny little bit of risk to the bottom. That's what you've got to think of. You can't just take trades because they're trades. You see, that's where everyone goes wrong. You believe in the system. You believe the system's going to make you money. You believe a win rate's going to make you money. So you get into the trades willy-nilly. You see a candle, you see a trade, you take a trade. But you've got to have a business plan. You've got to work out the plan. And you've got to work out the risk to reward and make sure the risk to reward is in your favor and not against you. So that might be why I wouldn't even have taken that trade, because my risk to reward would have been poor. I'm waiting for a better reward. So what I'll do on this trade, like I say, wait for it to get to the bottom, give me a green candle out. Once I got that green candle out, I know I got a decent reward level and I got a smaller risk level. Sometimes that doesn't work out, but at least I know the probability is in my favor, not against me. So I hope that explains that as well. Okay. Okay, yes, Shane, I would. Yeah, absolutely. You could put your risk on the other side of the trend line as well. So, for example, you can say, all right, I'm going to put my risk there, okay? But my reward is like still not going to work out. My reward's still going to be really poor. So even if I put my risk right here, if I say, I'm going to take a high risk here, I'm going to take my chances, then my risk is still going to be up there, and my reward's still going to be there. It's still going to be a bad risk to reward scenario, even if I put my stop loss there. And even then, I'd actually, if it broke through that trend line, yeah, you're quite right to get out early, because it's probably going to go all the way to the top. But your risk is still that much higher than your reward. Your reward is tiny on this particular trade in comparison to your risk. So no matter what you do, you're snookered, let's say, on that trade. So that's not a good trade at all. And if you are long, then I'm in the scenario of hold, because your risk's not that bad. Okay. And hi, Kevin. Good to have you. But it's also in the area where it's hit before and turned around. Yeah, totally. So this is why I say, risk to reward. You're looking at it bouncing off the support, bouncing off the resistance. You can literally sell and buy this trade every time it hits bottom, top and bottom. But like I said, I don't have a crystal ball. I cannot tell you which way this is going to go. The only thing I can do is read the chart like a book and tell you if there's a green candle, I'm going long. If there's a red candle out there, then I'm going short. The thing is, Eddie, like you say, do I like the 3 touches on a trend line, or is 2 okay? You actually don't need any touches for a trend to see a trend, or whatever the case. But the general rule of thumb is to have an accurate trend line, you want to have 3 touches. Now, I don't want to influence you guys into thinking, oh, I've only got 2 touches, so I can't do this. So I've got to be careful how I say this, but the rule of thumb is 3 touches is a trend line. 3 touches is a resistance. 3 touches is a support. 3 touches is a good trend line. That's your ultimate. But if you have a situation where you only have the 2 and you've drawn a trend in, it's okay. It's okay. You've got an idea of where it's going. But as long as you understand within your own heart and your own knowledge that, hey, listen, that trend line's actually only got 2 touches, probably not the best trend line. I mean, even if you draw a trend in and there's like really no touches, you're just looking at a general where it's going. Just understand within yourself that this is not a slam dunk trend, okay? It's just you've got an idea of where things are going. And if things should change, you might want to move the trend line. So, for example, if we only had 2 touches and then suddenly a third one came much higher, then what you would do is say, oh, you know what? If we take it up there, then suddenly we've got 3 touches. That's actually a much stronger trend. So if you understand within yourself that you can move it to a stronger trend, if the pattern changes later on, then that helps. Just remember, guys, this is human beings trading. The charts are not an exact science. They are a ways to a means to get a high probability out of it. So you don't have to knock your head against the wall and say, "Oh, I can't do that because it's only two touches or whatever." You can, by all means, you can obviously play around with it a bit, but rule of thumb, 3 touches. I watched someone draw the trend lines from the month, week, day, and 4-hour, and I personally thought, why go back so far? Are they going back years at the higher time frames? Too far back, but surely not relevant. Okay. You know, the relevance of it is the higher you go with the time frames with anything, the more decent the information, the stronger the information you're getting. So it's not wrong to go that far back or that high with your time frame to get your information. Because as I've always said to you, the higher you go with your information, the stronger the information you've got, the more reliable the information is. The lower you go with a time frame, down to the 5 minutes, the more unreliable your information becomes. So I get it. I totally get it. Okay, my opinion only is that if you are going to draw this in, the day is probably the most average and best area to draw your lines in. If you really want to get overboard, you can go to the week. But the day is the most traded time frame. The day trade, the day time is the most popular and most traded time frame. Anyone who's investing normally trades on the day. Anyone who's positioning normally trades on the day. So effectively, the day is your strongest information, actually, if you think about it. So yeah, a week is good. A month is okay, I get it. But as far as strength goes, but as far as needing to get good information, my personal opinion, my feeling is the day is more than good enough, because the day is the most traded time frame. And it's got a lot of information. It's a whole day, and it's got enough information to give you the direction of the market. You'll even see, if you go and watch any news channels, if you go watch, I think was it CNBC or all these different Bloomberg, all these guys, when they're showing you stuff, when they're showing you charts, when they're talking about an instrument, when they're talking about anything, a share, whatever the case, they're normally referring to a day chart. They're normally referring to daily technical analysis and that sort of stuff. So the day is the way to go. Okay, and yeah, Shane, this is it. The truth is, all systems work. It's the psychology that brings us down. Do you know, one day I must actually go and watch. Sorry, because you guys are talking about it. You know, I've never watched one of her videos. I should actually one day go and have a look. I do have a look at other people's videos and what they're doing and how they're doing, obviously to make sure my YouTube channel kind of lines up, you know, and it's doing the right thing. But I very seldom actually watch their videos. I was actually going actually sit and watch the videos and see what her system's all about. Got no idea actually. Okay. Could you find that bottom trend line without going on daily and just focusing on the 4-hour? Ellie asked if I could have found that bottom trend line without going on the daily and just focusing on the 4-hour. Yes, you could have. You see there, you could have. You could have easily done it. Just focusing on the 4-hour, you could have done it. But would you? This is the 4-hour. Would you have drawn it in? Would you have figured it out? Because you'd have to go quite far back. You see how small I had to make it. So, you know, you will find it. You will find it there. But I find that going to the day chart helps a lot in that sense. Okay. You know, you get better information from it. You can see where it is and what it's doing, and because you're drawing it out a little bit, it gives you more information. But yes, if you take it and you draw it on the 4 hour, you can. Obviously, you're going to get the information there as well. That's why I say to you guys, you know, when you don't have to go back to the month to draw the information, you can draw it on the actual time frame that you're on or the daily. But the most reliable information does come. You must remember, the lower you go with your time frames, the more candles you end up with, because every candle is 4 hours here. If you go to 5 minutes, every candle is 5 minutes. So your information widens out, and for every candle, your information becomes less and less and less reliable the lower you go with the frames, which is why we take the information from the daily, because the daily gives you a good idea of where you stand at the end of the day. So if you go to the daily here, you can see. That's why I said in the beginning, before we drew the lines, and you can look at the chart, you can see it's come along. That's given us a long bullish run up to here, and then it's ranged. Now we know it's ranging. This could be a flag pattern, so it could resolve to the upside, which they normally do. But you can also see you've got this trend that it's breaking out of on the day, and it gives you a lot of information. Take that to the 4 hours, and then you won't get that information so easily, and this information becomes disjointed. That's why we take it to the higher time frame, just to get a better picture. Just gives you a better picture of what's happening. And like I say, some of us traders, like you said there, go to even higher time frames to get the information. You'll see a pattern of that if you're watching a lot of different people, that the more experienced traders do take the time to go to the higher time frame to get the levels. Just makes it more reliable. Okay, can I email you some links to other people? Shane, yeah, do so. I also watched her uncle's videos. Okay. Okay, Ellie, like I said, it broke the trend line. So it's going down. Yes, that means it's going down. But as I said to you, we won't take the trade because there's a support here, right? Got it? And there's no risk to reward. It might hit the support and bounce back up. So we'll wait and see what happens when it gets to this level here. But yes, you're correct. It's broken the trend line, so it's going down. It's bearish for now. But in the short term, doesn't mean that it's going to go forever. Okay. It's a reversal to the downside for now, but not far. Okay. So you get that. So there's something blocking it, yeah, and your risk to reward's not good. So there's an Uncle Mike. Okay, yeah, send me links, Shane. Let me have a look. It was interesting. I'm sure I'll find it as well. If I go and have a look, I'll go and find it. Don't worry, it's fine. I'll find it. Don't worry. I'll go and have a look out there and check it out. There's quite a few people that I have seen. Maybe watch one or two here and there just to see, you know, what's going on, what they're doing. But nothing that's really inspired me. In the very beginning, when I started this channel, I watched a few, I can't even remember their names, but it was all hype and Lamborghinis and rubbish and whatnot, which is what inspired me to start the channel, because I was like, my goodness, these people are going mad. But a couple of the guys that you've mentioned to me in the past, I've sort of checked back and I see that a lot of people are more level-headed now, I must say, than they were in the past. In the past, people were going nuts, promising people they'll make $1 million in a day and stuff like that. That's actually what drove me insane. Yeah, so, you know, when you say usually, you see what I said to you now, when we trade in a range, what generally happens is you can sell it off the top and buy it off the bottom, because this is an area of liquidity. Because all we're looking for is areas of liquidity. So because there's liquidity here at the bottom, what we're expecting is it'll get into that area and then it'll take that liquidity, give us a green bar, and go back up to the upside. But there's no usually. So what you got to do is you don't know what it's going to do. So because it's done it a few times, the likelihood, the high probability is it'll hit that, give you a green bar, and go back to the upside and continue in this range. But it could break through this area, give you a red candle to the bottom. And if that happens, you're talking about a serious reversal, because then it's falling into space. So that you've got to watch out for. So you just got to wait for it to get here and show you what it's going to do. Now, the high probability here from experience is this is more like a flag, which means because it was bullish, and that's what we looked at on the day. It came up and it's created this range. What normally happens with a range like this, it was on its way up, it'll go along, it'll normally break to the upside more to the down than to the downside. So you'll get like it'll go back up, it'll go through the resistance, and then it'll fly to the upside, which is most people got caught out long here, because when it broke through that was like, oh, that's flying. Everybody wanted to get in because it broke. And when it breaks a flag pattern like that, it normally goes insane. And everybody got caught out by that, and it came down. Markets 50-50, human beings. It surprised everyone, became a black swan event. So you got to be careful of that. That can catch you out. But generally, if it breaks through to the upside, it'll go. It'll go for sure. Either way, whichever way it breaks out, it's normally quite serious, quite a serious breakout. Yeah, no, that's great. I get it, Shane. Don't worry. Now that's about, how long ago did I start the channel? A year ago, just over a year. And it was a channel that was just lying there with a couple of videos about crypto on it, because that was something that irritated me before that, but I wasn't worried about it. And then I decided to make 1 or 2 videos about trading, because I thought, geez, all these guys are telling you you're going to make R1 million in a day, $1 million in a day, or take $100 and turn it into $1 million. That's all I was seeing on the internet. And I thought, that's rubbish. I didn't even watch their whole videos, but I looked at it and I thought, this is crazy, man. This is crazy. And I thought, no, I'll make a video about that and see what happens. And this is what it's become. And the channel has grown to quite reasonable heights already. And we've got live shows now and all that kind of stuff. And I'm kind of addicted to it now and hooked into it. So you guys have got me now. So there we go. And now I've made so many videos and created a whole industry out of it. So there we go. Fantastic. Absolutely brilliant. So, but it keeps you busy, if you're a trader, it's great. And, when I thought I'd make 1 or 2 videos, and then I realized that I made quite a lot of videos, and here we are. Great. Yeah, no worries, Shane. Don't worry. It doesn't have to be right now. And besides, I'm going to go and look for it anyway. I'll go and check it out. I'll go and see what it's all about. And it's probably, and all the trading systems that are doing anything on the internet are probably very similar to mine. We all come from a very similar background, I suppose. And I don't see that it's going to be a hell of a lot different. Everybody's probably going to have pretty much the same stuff. Yeah. That's always very interesting. Oh, and Shane, did you call the Great British Pound Aussie dollar? Because that's doing pretty well, don't you think? Not the worst trade we've had on the show. Everyone gives Shane a hand for Great British Pound Aussie dollar. Good one, dude. Good one. Nice trade, lad. Nice trade. There you go. Okay. It's going really well, eh? Yeah. You sent 2, you have 3 more. Okay. No, that's great. I'll have a look at all of them. I'll have a look at all of them. Okay. Yeah. No, that's great. Yeah. It's always good to see what everyone else is doing as well, I suppose. And out of interest. I know Tom. I know him. Who was the other guy? Way back. Used to do Wyckoff. Can't remember his name. South African dude. And who else do I know? Sure. I don't know many. I don't remember their names. But I obviously look at what titles are out there and what people are doing and stuff like that. But yeah, it will probably knowing me. Yeah, no, we'll have a look. Let's just see. Okay, see, sometimes you do get lucky, Shane. Sometimes you do get lucky. Sometimes it works out. Well, I'll put a trailing stop on it, so we'll see what happens. And we'll see if it goes in our favor and it gets down to the target here. It'll be like trade of the week, man. No, I've sent them to news. Okay. All right, guys. I'm going to head on my way now. I've been here for quite a long time. And it's been quite a decent, long show. And yeah, that was a great trade today, guys. It's going well. Great British Pound, Aussie dollar. I guess I should leave it there. And we'll see on Thursday how it played out. And if it played out positively, or if, like Shane says, it didn't work out. No, Kevin's, I had it and it was going well. And I put a trailing stop on it because of this level here. You see this supply of money. So I put a trailing stop on it over there. It took us out. And we got taken out for 115. Okay, so it's okay. We're in positive. I mean, it was a win. But what I decided to do after it took us out on the trailing stop was say, okay, let's wait and see if it breaks out of here. If it breaks to the upside, we'll buy again. Or if it breaks to the downside, then we'll just wait for a trade down here and we'll get back in again. So yeah, we were in. We got taken out for a small profit of $115, but it's a profit nonetheless, so it's okay. It was just a trailing stop that got taken out. I brought it up really close. It's my fault. Because of this area, I thought, nah, it's gonna bounce off here now. That happens, like I've said to you guys, is you find these obstacles in the way, and then you're like, let's just put the trailing stop up close just in case and see how it goes. Right. So I just want to thank you guys for being here. Ellie, do come back on Thursday. Thursday, it's a bit later, eh? 2:30 GMT +2. I try and cover everyone in the world as much as I can. So some of the audience is a little bit different, and then there's a lot of regulars that somehow fitting in the middle. But yeah, I try and cover as much as possible. And I want to thank you guys, and thank you for being here. And don't forget to like and subscribe. Yeah, I always forget to ask that. I must learn to ask that. To learn to ask the guys to like and subscribe. I believe I'm a bit behind on that, and I got to catch up on the... I'm still learning the YouTube thing. I mean, I know I've been doing it for over a year, but I'm really still a beginner, let's be honest. I've got a long way to go to become one of those big YouTube guys or whatever that knows all about YouTube. The last thing I would ever profess to know everything about is YouTube. I've got a way to go, and I hope that I master it, because that's my target now, is to master it and do it well, because I'm enjoying it and it's a bit of fun. So if I do something, I want to see it through. So yeah, while I'm trading, I'm learning YouTube at the same time, and at least I can say I've learned something different. It's actually good fun. Guys, thank you so much. Thanks for watching. And guess what? I'll see you guys on Thursday in the afternoon for me. Don't know what time it is for you, but we'll see you there. And keep your feet on the ground and reach for the sky. Cheers.